Mexico gross domestic product year over year meets forecasts 0.8% in 1Q. Mexico gross domestic product QOQ meets expectations 0.2% in 1Q.
Mexico first half month core inflation meets forecasts 0.16% in May.
U.S. S&P Global PMI set to highlight worsening manufacturing sector in May.
Fed's Waller, tariffs will be a one-time price increase.
Fed's Waller. If tariffs are closer to 10%, then economy is good shape for 2H.
Eurozone private sector shrinks for first time in 5 months. Iceland monthly wage index rises 1.8% in April.
ECB accounts. Inflation expected to hover close to target of 2% for remainder of year.
Pigs can't fly. US high-end livestock breeders lose millions in China tariff fallout.
Looks like we'll start in about 6 minutes. Let me get you some background music.
Mexico gross domestic product year over year meets forecasts 0.8% in 1Q.
crude oil futures drop on potential OPEC plus output hike.
Currency accords and fiscal policy offer U.S. dollar headwinds. BOFA.
Hey, I had to relocate a scorpion. Enjoy your new home, Mr. Scorpion. Too bad they don't eat squirrels. He could have stayed if he was a squirrel killer. All right, let's get on with it. Let's go, 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 go. Welcome to Forex.Today. Let's go. All right. Hey, was there any sound during that video? I don't get any sound, but it looked like it was doing something. Let me know. Disclaimer time. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Wait, how do you get that radio voice of yours?
UK private sector logs marginal
It just comes
correction.
naturally.
FTSE 100, notably lower. Johnson Matthey soars 32%.
Sorry, that's my squawk box. We have a squawk box, you know. Yeah, at traders.com. See? So that's the headline news radar. So that's why every once in a while you hear a voice in the background like, who is that talking? Oh! Well, that's our AI. It watches the headline news 24 hours a day. So, for example, like, are you up to date on Mexican GDP?
Mexico gross domestic product year over year meets forecasts 0.8% in 1Q.
Oh, are you up to date on the Waller speech? Fed's Waller, tariffs will be a one-time price increase. Hey, why are oil prices down today? Crude oil futures drop on potential OPEC plus output hike. Yeah, got to know these things. Anyways, so welcome to Forex.Today. Let me know what you want to do, and I can try, but what I've whittled us down to is a routine in which I go through the most requested assets of the day. So really, if there's something beyond this, depending on the amount of time, I might be willing to do it. If you have a question on fundamentals, we can do that as well. I'm going to try to create a way to do some level of fundamental analysis. I'm not sure what to do because, well, first of all, at traders.com, we already did our fundamentals. Okay, we're already done all of that. So, but for the YouTube community, maybe I could do some. I'm not sure what to incorporate. Maybe just even just the opening, welcome like we're doing now, right? That at least I can cover this page. But I've gone through everything. We've done the weekly jobless claims analysis, all that kind of stuff. But, we'll do some form. So anyways, yields went up yesterday. Oil went down. Why did oil go down? Oh, because of OPEC. See, we already know. This came out in the headline news radar. S&P 500 had a down day. Are you going to buy it? Okay. Bitcoin. Oh, we hit it. 1111111. Big day. Monster day. Is gold going to do the same? I don't know. Are you on it? So we'll review gold, oil, and Bitcoin, and a bunch of other things. Euro, dollar, pound, yen. So we'll go through that in our daily YouTube routine. Today, I am using traders.com, which is a service that automates all your technical and fundamental analysis and provides performance coaching and lowers your spread. Yeah, that's pretty good. And we have a prop fund too if you want to be involved with that. That makes TRADARS free for most, or many, or some. But anyways, we're also using Traders Way for our execution part. So are you guys ready to go? How many people here liked the chapters that I did for our YouTube yesterday? So now now it takes me some time, and maybe hopefully I can speed this up. But yesterday I added chapters to yesterday's video so that you can jump ahead to euro dollar, S&P 500, pound yen, oil, Bitcoin, gold. Okay. Now, what is my Aussie CAD analysis? That's where you're just going to have to subscribe to traders.com, and you can just pull that up. So today I'm only going to do these assets. Okay. But that's an easy question. Okay. Aussie CAD? Yeah, just pull it up. It's easy. Take you a second. Cool. So they're all time-stamped and hyperlinked and everything. It's much better? Cool. Well, I'm sure subscribers are going to jump to probably 1 million subscribers. Yeah. Very quickly, Mr. Beast, Wayne McDonald, they're almost synonymous. So without further ado, this is what I need to do. And see, I'm not experienced enough to have my process efficient. I need to click something now with the video. So hang on. I don't have the video up. I have to timestamp everything, right? So hang on. I forgot to bring up my timestamper tool. So you're getting Forex.Today raw and live. Okay. So this is the process. Oh, okay. See, I got to get better. All right. So this page needs to be bigger. That page needs to be over there. And so what I do is I hit the marker. Okay, everybody. Euro USD. Let me know what you think. Are you a bull or a bear? And please, okay, please don't take 20 minutes. Okay, bull, neutral, and bear. Come on, let's do this in like 30 seconds, huh? Here it is. I should probably write it out. I can take the extra time, write it out a little better than that. But please answer the poll. What is your sentiment today for euro dollar? Euro dollar. Euro dollar. Answer the poll. Come on, let's go. Go, 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 go. We got 10 votes. Who's leading the pack? Bulls or bears? Are you going to be, if you trade today, are you going to have an army of people supporting you or attacking your position? Don't you want to know? See? Abdul and Andre, they're fighting each other. Don't you want to know? Come on, guys. Vote, 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 vote. Vote, 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 vote. 3, 2, 1. If you didn't vote, you're lame-o. Lame-o. But anyways, thank you for participation. Okay, looks like, it's close, huh? 42% of voters were bullish on euro dollar. 38 were bearish, and 19% were neutral. Oh, and I didn't use my magic transition tool. Let's see, I got to get better at this. All right, so let's see what we got. Okay, so we had a down day. All right. And I'm trying to zoom in here right now, this could be a plan A if you're a bull. This is a good place to look for buying. It's not, okay? And if you're a bear, this is a good place to look for selling. Right sort of here. So on a 5-minute chart now, it depends on now what your bias is. Because remember, we know based on implied volatility that this is a good time to trade. And you're like, I do? Wait, you don't know about the implied volatility? So like, for example, if we go to the sentiment tab, and then we go to the volatility radar, and so you should know this. Again, if you're a subscriber to the Trader platform and trading teams, you have all this, right? So what we're talking about is what will happen to the Euro USD in the near future, meaning the next couple of hours. Okay, that's a great question. Okay, over the next couple of hours, oops, let's do this in black. How about black? There we go. You'll see that the volume and volatility increases. Okay, so you want to be ready, willing, and able. It's an interesting glitches. So you want to be ready, willing, and able is what I mean, right? So whether you're a bull or a bear, that's up to you. But if you're a bull, if you answered bull and 42% of you did, okay, this is the time of day that you should be looking for your pattern. So you might be filtering this with your mind as something like this. Remember, bulls don't know if they're right, bears don't know if they're right, but you should know how to trade. So bulls are going to look for a variation of this. That's what a bull would do. Okay? And what I have is bears are going to do the opposite. Why? Because they're not looking to buy low. Bears are looking to sell high. Okay? And there's not much more to it than that. So you're one or the other. And now you're on your 5-minute chart deciding not if you should buy or sell. You're deciding when to buy or sell. So that's just scalping, by the way. That's just simple market open stuff. But on the higher time frame, you could be a bear today and, a bull in the future. But that's perfectly valid. So don't go into a market like this trying to figure out what you want to do. You should already know. As another example, should it be apparent to you, if you were a bull, that this was a take profit zone? Well, check it out. Check it out. I drew this many days ago, if probably last week. Price would come up, price would come down, and then maybe go back up again. Yeah, I think I did, didn't I? I did that 1 week ago. Last Thursday. Yeah, pretty sure. Not bad, right? Well, dude, it's not me predicting. I don't predict. Okay? This is what the chart says. That's the thing that I teach. If you don't know that's what the chart says, then you don't know how to chart. Okay? So anyways, whatever. So that did happen. Very cool. This is why you should attend our swing trading group tonight. Yeah, cool. All right, so let's do the S&P 500 again. Okay, let's start a poll. What is your bias? Oh, bias today. Bullish, neutral, bearish. I wish you could just say the template here. Okay, let's go. S&P 500. Go, 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 go. Vote, 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 vote. Let's go. Vote, 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 vote. Let's go. Let's go. Okay, come on. Let's see. Again, half of you have voted. Why does it take so long? Maybe there's a delay in the YouTube stream or something. I don't know, but dude, why does it take so long to share your opinion? Click it. Let's go. Nobody knows what you voted. You don't have to be shy. But let's look at it. Okay? You're too slow. Maybe it's YouTube, though. I had to click that 3 times to close it. All right, so your bias today. You know what? I should probably put in the asset when I do the poll because then we have a record in the chat. All right. See, I'm learning as I go. So you guys are neutral. Oh, and I forgot to timestamp. All right, S&P 500, you guys voted. What is your bias today? 40% are neutral, 36% are bearish, and 22% are bullish. So now let's go to the chart and see what in the world is going on with our S&P 500. Bum, 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 boom, boom. Okay. All right. So let's go to a higher time frame first. There was a potential, okay, of maybe heading higher. We had it for sort of a week. Now, obviously, on the short run, that didn't work yet. Or it won't work at all. One of the things that we did talk about is in a scenario where this is our bottom, this is actually the predicted top. Now, I still think there's, can we get to a top here, or are we going to wimp out that close? I don't know. I'm still a bull. Okay. But there's a bearish period. So how do you treat this? Okay. Well, you treat this by looking at what used to be support in the past. Okay. And so I'm including, in this case, let me do circles here. I'm including all of this in my eyeballing, what we call eyeballing. Okay. So if we get down to this zone, and as you can see, that's exactly where we are now, there is potential for continuation, and then we're just going to connect all of these. So it's actually a June swing trade. You guys see that? Puts everything into context. So if in the next day or two, we find support somewhere in here, okay? If in the next 48 hours up, then we are going to 62, then 6,200. And so this would have to be revised to basically look like. What do you guys think? So most people are neutral. Nobody's bullish. That's interesting. Only 25%, 22, 1/4 of you. So bears, you would be prepared to sell. Is that bearish? Not quite yet. So you could be a bear here. You could be a bear here. And the best one of them all is a bear here. Okay? That's it. Bulls, you have to see the support on a higher time frame. And I don't quite see it there based on pivots or moving averages. We're check the daily. Oh, zoom back in. Zoom, 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 zoom. Yeah, I don't quite see it there, bulls. So most of you are bears or neutral. So I think you're correct. So in this case, you have green candles and you should be ready to sell. If you're a bear, this is the right time of day to front run the New York Open. And there are three possibilities. That's the most aggressive. This is the most ideal. And this is the best price. So what you do is you get the implied open and then you drop it, right? And you're like, Wayne, what do you mean by implied open? All right, well, let's bring it up again. You have all this data if you're a subscriber. None of this should be new, but let's take a look. Wait, I think it's there. S&P 500, we're talking about that. Okay, so what does this say? Based on implied volatility, this drop is right in our sell zone. You already missed it. Terrible, huh? Yeah, you should know that you should be setting up your trades an hour or two ago. Logging into YouTube to listen to a guru at 8 something in the morning is just way late, bro. Okay? So anyways, using our implied volatility tool, if you were a bear, we know this price zone is your sell zone and that this is the time of day in which you should be doing. Okay? Because you want to be in and then have all this volume behind you. So if it is a down day, the volume's going to be down and we're going to work our way down to that target. Cool. Now the question is that a longer term swing? Well, that's a much different question. This is just what happens on Thursdays, this time of day for the S&P 500. It doesn't tell you if it's bullish or bearish or for how long. It's just here's the upper range. If you're a bear, you sell the upper range. Simple enough. If you don't have the data, then you don't know jack. Huh? Oh my gosh, you're trading, but you don't have the data? Lame for you. Good for everybody else. All right, now let's do the beast. The beast. The beast. The beast is on fire. Okay, are you guys trading pound yen? Well, let's see. Let's do a poll. What is your Great British Pound yen bias today? There we go. That's better. Bullish, neutral, neutral, and bearish. Okay, you ready? Here we go. 3, 2, 1. Go, 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 go. Come on, let's get this done in 15 seconds. We should have dozens of votes. Let's go, y'all. All y'all. Go, 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 go. Vote, 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 vote. This is the best sentiment survey you could possibly get. What do retail traders think about pound yen right now at the New York Open? Come on, guys. Less than half. You got broken fingers? Use your toes. Don't be afraid. Don't be shy. Forex.Today gives shy people the strength to get out of bed and do what needs to get done. Don't be lame, yo. All right, whatever. We'll leave you behind. Yeah. All right, so the market is heavily bearish on this one. Cool. Neat. All right, so what you could do then is just pull it up and find your buy zones and your sell zones based on implied volatility. That's one way of doing it. That's an easy way. You can use chart patterns. Well, it's a new process, right? So maybe people are just getting used to. Maybe they're not used to being asked their opinion, right? Okay, so if you're a bear, here's the 1 hour, 4 hour sell zone. Done. You're like, wait, where? Oh, right here. Okay, right here. Cool. And so what's your trade plan, bears? Well, it should be something like this. Cool. Okay, volume is going to pick up. The volume of whom? Oh, wait, I didn't switch. And I didn't timestamp. I will get better at this. Okay, so pound yen, we voted 70% of the market is bearish. Yeah, and looks like there's even a YouTube is slow today. But nonetheless, what I did was I said, hey, I pulled up the implied volatility for pound yen on the hourly chart. And for those that are bears, okay, it looks like as we get closer and closer to 193, it's your sell zone. And this would be a target of down to 191, so 200 pips down if you're correct on direction. And remember, the timing of this trade is when volume for this asset's going to pick up. So if you're correct on the bearishness, then more bears are going to start selling as the New Yorkers log in to make their first trade of the day. They're going to say, ooh, sell pound yen high. And you'll get more and more selling high if you're correct. So 200 pips to the downside. That's one way of doing it. See how easy it is if you have the data? Why would you want to trade without the data? It sounds terrifying. Okay. And here's another variation. So let's go to the 30-minute chart. The other one, well, let's do the same one. This is the hourly chart now. And instead of doing implied volatility studies, we're doing pattern recognition. Okay. And this is a live chart. What does this say? Okay. The trend is bearish. Oh, and you want to sell today. Is that good or is that bad? That is, right? That's an opportunity. Currently, the pattern says it's more likely to rise for a while until we get close to 193, which is the implied high of the day, not based on technical analysis at all. It's quantitative. This time of day on Thursdays, what is the trading range? The average trading range. Well, the average trading range is up to 193. And 70% of the market, or at least 70% of our market, is bearish, which means when you get to the top of this range, they're going to want to take it down. And check it out. There's the 200 pips. Completely different mathematics than the implied volatility tool, but the implied volatility tool said the exact same thing. Oh my God. Well, that is a bearish channel currently with the threat, but the next opportunity would be to sell at the higher end of that range. Oh my goodness, it's so good. Yeah. Okay, so I'm going to then change this and say That's the upper bound range. We're going to treat this as a lower bound range. The actual trend is sideways. So we're going to look at this zone down here as a potential bottom. We'll extend that out, basically going this way. And that's probably the swing that we'll analyze later today. Has it made a lower low on this time frame? No. Okay. Monthly R1 predicts monthly S1. Okay. And we did this on another pair. So this range, we call this an inside range. So you have to have that in mind. So potentially for that. Okay. And just to make it really confusing, adding some more lines, let's measure this out. So technically it could still go up if you're a bull, but you're not a bull, so you don't care. Let's do some oil. Okay, let's do some oil. So what is your WTI bias today? Oh, I typed it in the chat, not a poll. All right, let's get the poll, start poll, paste it in. Up, side. How about flat? Up, flat, down. How about that? Less letters to type. Okay, let's get going. You do that. And I have not done Bitcoin. That is next. We have Bitcoin and gold to do next, hope. All right, are you guys voting? Let's go. Let's go. Gee whiz, this should be done in 6 seconds flat. Let's go. Come on, let's go. Are you tracking the OPEC news? OPEC talked about it today. Do you even know about it? Are you using inventories from yesterday? What goes into your opinion? Yeah, well, whatever. Let's go. So, most people are down to flat. OPEC is setting up rumors that next week they'll set up a rumor. Yeah, there's a rumor of a rumor that OPEC, not at this meeting, but at the next meeting, which is the first week of July, they're going to jack up production and drop oil prices. Well, hell's bells. So that's what this is all about. Okay, let's add a little, I forgot to flip again, didn't I? Gee whiz, sorry. Yeah, this new process is a little tricky. I'll get better. It's only day 2. I'm just adding the chapter. All right, so I just drew this. Sorry. Okay, I drew this, and so the rumor of the rumor. So what that means is, I think it's next week or soon after next week, there's an OPEC meeting. And in that OPEC meeting, they're going to hint that at the July OPEC meeting, they'll want to increase production. Yeah. No, Anthony, there's probably a hotkey for switching, and I just need to probably just get better. I just have to get better. Practice makes persistence, so I'll just keep doing it. So anyways, the rumor now is that the rumor is coming and that the production increase will happen in July, which means we're on our way down with oil. So anyways. Right? So there we go. So that's what's happening. I don't believe it's based on the idea that global demand is going to collapse. I believe this is future increases of supply. Nonetheless, we have a new number. Okay. I call it the Trump put around 55. Could it be lower than 55? Yeah. Could it be 50 or 45? Well, it could be. The thing is, right now, we have a line in the sand. But let's say around $50. I think that allows us some flexibility here. Around $50, which is actually a little bit lower. The United States will want to support price. They want low oil prices, but not too low. And they'll support it by buying oil and putting it into the Strategic Petroleum Reserve at the lowest price possible. Which also means, yes, West Texas oil will be purchased, but also if we're going to purchase West Texas Intermediate, we're going to need some Fort McMurray oil and Caracas oil. We're going to need some heavy crude because the oil that goes into the Strategic Petroleum Reserve is synthetic. Good to know, right? Well, if you didn't know that, you need to take the oil trading course. Oh, for sure. So right now, I'm calling it a Trump put where it'll fall, yes. I expect it to fall, yes. I'm been preparing to be a bear, and seasonality will be soon. In fact, you can call it now. Might as well just call it now. Because Kurt Worley did 50 years of oil analysis and found that June 1st was peak oil. Okay? Peak oil in the year. And so you're like, oh, so that's when supply is the highest. Uh-huh. And so we would draw down and, right? We're like, whoa. It's actually kind of a different process. Think about it that between, let's say, March and June, okay, oil inventories rise. So think about what's happening. Their inventories are rising, but it's not production inventory, it's purchases of oil by refiners to make products out of it. And that stops in June because they've bought all the oil they need. So the demand for oil in July, even though demand from consumers for gasoline is at a high, demand by refiners for WTI to get oil to then make gasoline is at at a yearly low because they already bought all the WTI they need. So somewhere, is it always June 1st? No. Could it be May 15th? Yeah. Could it be June 15th? Yeah. Could it be earlier than that? Could it be later than that? Yeah, but the normal distribution would be around June 1st. Well, it could be this side of the distribution, could be that side. Very thin tails, I would guess. that demand for this product, WTI, drops because all the buyers have bought already. So somewhere around June, and by the way, what is it, May 22nd? Is that close to June? Could you sell at resistance? Yeah. Just on top of that, know the politics. No, you need to know the chart. You need to know the global macro. You need to know the geopolitical. Okay? And then just the local, not geopolitical, but the and don't kid yourself. Okay? Every war for the last 150 years has been about oil. Don't kid yourself that, politics and energy are separate. So you need to know a lot to be an oil trader, but if you get it right, you make a lot of money. Have you guys ever noticed that? Okay. This move in Europe today, okay, when the news came out, the rumor came out that hour, that's about an hour's worth of trading. That's more than Forex moves in a whole day. So if you got it right, you made a lot of money. If you got it wrong, yeah. Hey, double-edged sword, yo. Yeah, double-edged sword. Just wondering if we still have it on our sentiment radars. Let me see if I can.
Russia's central bank reserves dollar dipped from previous 687.3 B to 667.5 B mine BBO.
U.S. S&P Global PMI set to reflect steady services, minor dip in manufacturing in May.
Futures pointing to continued weakness on Wall Street. Euro US dollar declines as US dollar gains after Trump's bill advances to Senate.
U.S. dollar firms after initial jobless claims, 30-year yields, can't crack 2023 high.
U.S. weekly jobless claims, unexpectedly, edge slightly lower. Gold retreats while outlook remains firm on U.S. debt concerns.
U.S. initial jobless claims dropped to 227K last week. Canada Employment Insurance Beneficiaries change, MOM, 0.3%. So I'll just, I wasn't thinking clearly because that wouldn't have been on the calendar. So obviously it's not going to be on the calendar. Rumors are not put on the calendar. But it would be, you would have been notified here though. And that news has come and gone a long time ago. But yeah, so anyways, this idea that OPEC is going to raise not this in June, but in July, that's what moved this. So you should know. Okay, you should know that. That's why it happened. You should know that. Okay, what about technical analysis now? Well, if that makes you a bear, check out that role reversal. What do you think about this role reversal? Gorgeous, right? Yeah. Gorgeous. How long ago was that? Mm-hmm. So let's mark this out as an area of concern for today. And you need to decide if you're a bull or a bear. Most of you have. And then you start looking to take this lower. So if you were fibbing this, okay, I'm not going to fib it, though. I'll do it this way. You should be, very interested in what's happening now if you're a bear. Okay, this was the best, most obvious, okay? Lower low and then lower high. Typically in this situation, you fib between these giant green gobbledygoos, and you can see that that's probably a 50%. So if you're a bear, you're going to probably take it down, and then be careful around here, huh? If we get lower than that, then we're, but that's near the psych level of 60. Okay? Once you get from 60 to 55, you enter the Trump put territory. I don't even see it. What happened to my Trump put? Okay, Trump put territory. Okay. But you can see, like these moves earlier today, that's just straight up basic technical analysis. Nothing complicated about that. So bears, be aware. The biggest issue here for you is we're $1 away from the psych level. Yeah. All right, we're going to do Bitcoin and gold next. What is your bias for Bitcoin today? Oh, I did it again. Click on the poll, click on start a poll, click on the question. Okay, bullish, neutral, and bearish. Okay, so what is your bias for Bitcoin today? Bullish, bearish, neutral. Let us go. Please vote. Let's go. Go, 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 go. Vote, vote, vote. Okay, let's go. We are in prime time sell zone, or sell zone, trading zone, based on our clock. Volume and volatility is going to pick up. All you have to be correct on is direction.
Euro US dollar price forecast. Buyers hesitate, sellers still out of the picture.
May Belgium business confidence 13.5 versus 14.0 expected. Okay, you ready? Let's go. Man, slow as molasses on a cold Georgia morning. Anywho, looks like you guys are bullish to neutral. Bullish to neutral. All right, let's take a look. So, this color here represents that we just entered a time of day that's excellent for trading, where volume picks up. So for the few bears that are out there, this is perfect for them. Because based on the time of day, this is the best time to trade. And if you're a bear, you're going to love a top. Now, if you're a bull, you think that's silly as can be. Good. So you're looking to buy some dips, huh? Yeah. Your choices are basically the bottom of the range or the moving average. Now you can also add to this and go insert, indicators, custom, biased pivots, bullish mode, daily. Okay. And you can see the plan has already been achieved. You're like, wait, what? Yeah, your plan in Asia was to buy Bitcoin, and the target, check this out. If we want to get specific, that's the zone, but this is the actual trade, and that number predicts this number. It's that level of precision. Yeah. Yep. It's like this predicted that. Yep, it's true. Look at bullish profit zone aggressive. Bullish profit zone aggressive. Green is up, bro. So the challenge here is Bitcoin's already done for the day. So it was almost a trick question. It should be, what is your bias tomorrow? So bears think this is done for today. And they're going to target a lower low. Why? They're bears. So at the very least, they're going to target the bottom of the range. More likely, that's where bulls come in, right? And fight back. But if bears have their way, they're doing this. Now, what I think is actually happening is there's no bear. I think what's happening is, for those that are astute traders, they bought here, they took profit. Maybe some bought back on this kind of role reversal type thing. Okay, you can see it with the spike and everything. All right, so that's an area of interest for bulls. So yeah, maybe they did buy at the London Open, and they're going to take it north. Now, by the way, this zone here, that's the London Open. So this is, okay, this is now the London boys buying. Cool. So here's the interesting thing. New Yorkers are logging in, and they're going to have choices. Are they going to buy it high at resistance, or are they going to sell it? And then maybe we all come back today or later today or tomorrow. Okay. Oh, thank you, Hope. Yeah. So anyways, you see, it's a timing issue now. But notice, like, using, and I've been teaching this now, well, for decades, but I've been bringing this up the time of day more recently, just to show you, like, we have all these templates, right? This shows you that, the best time of day, which is, again, kind of like an implied volatility tool. There's no magic to it. It's like, this is the best day. Why? That's the overlap of Asia close, London open, or really Europe open, because you have, let's say, Frankfurt opens, and then Paris opens, and then London opens. Okay, so meanwhile Asia is closed, so volume and volatility increases. Duh, makes sense, right? Orders to get out, orders to get in. Great, and now this is a similar. It's the overlap of the European session, which will close in 3 hours, and the open of the New York session. Yeah. So we're going to get an increase in volume. Cool. So you might be planning tomorrow already. Done. Wait, what? What did he just do? What did it? What? Look, you need to be planning tomorrow. Today's already dead. So it could be these guys bring it down, and then somewhere in between Asia and Europe open, it goes up again. So this is the point that amateur traders really miss, is that they do all their trading in here. and they miss this, and they miss this. Okay, like we'll just look backwards here, just today and yesterday. Today, this is the open of the day. If you're a bull, that's a buy zone. Bullish buying zone. It's labeled, for crying out loud. And the target at the very beginning of the day, Asia open, okay, is here. That's the target. That's basic technical analysis. It's in all the training courses. I've been teaching it for years. I wrote a book about it. That's it. Here's another one. The very first minutes of the new day, bulls are here. That predicts here. So what's going on now? I don't know, gobbledygoo nonsense. What's the plan for tomorrow? Well, why don't you do something similar? But we're not in that time of day yet. So now we're just going to battle it out. So maybe it goes up higher. Yeah, maybe. Maybe it goes to the bottom of the range. Yeah, maybe. I don't know what it's going to do. But do I want to buy a higher high? No, I don't buy higher highs. So if it does make a higher high, I'll buy the higher low up there. By the way, if that happens, this will move up because it adjusts, because the day hasn't closed yet. But, that's a big but, if it comes down, is this a reasonable price to buy? Well, using technical analysis, it says so. Cool. So if you're a bull, you want to buy it low, and ideally at a roll reversal, or a higher low, which could be out on a big moving average or something, right? Maybe it's a 21, maybe it's this, maybe it's that. Great. But you got to be careful about buying high, because I don't know if there's actual buyers. And at some point, if this forms a top, then bears will enter. I don't think we're there yet either. But it's what you have to plan. So the message here, if I was unclear, the message here is you should already be profit for the day. Either profit in the bank or move your stop. And you should be planning tomorrow. If you're not planning tomorrow, you're an amateur. That's one of the major differences. Okay. Anybody want to do gold? Let's do some gold, huh? Let's do some gold. What is your bias for gold today? Long, flat, down. All right, XAU versus USD. What are we doing today, y'all? Please take an opportunity to vote. Let us know what your sentiment is. Everyone else will also anonymously share their sentiment. And as a group, what we're doing is a sentiment survey of aggregate demand. Cool. XAU. What's going on? Vote, vote, vote. Go, go, go. 12 votes. Come on. Come on. I know there's a delay in YouTube, but still, come on. 13 votes. Let's go. Let's go. Go, go. Click it. Click it. It's funny because people are changing their minds. I can see that where it goes 17 and then it goes 15 and 17 again. You're like, really? This shouldn't be a big debatable, right? This shouldn't take a lot of energy. or thought process. You should already know. All right, I can't take it. It's too slow. You guys are just too slow. I can't wait. All right, so there we go. What is your bias? You guys are long to flat.
US dollar, Canadian dollar bounces. Price remains an up and down low area. Slovenia consumer confidence highest in 9 months.
Good job, Slovenia. Huh? Bratislava kicking butt. Wait, that's not Slovenia. That's Slovakia. My bad. My bad. I should know. Sorry, brain fart. All right. Gold. Okay, so what's going on? Well, you could look at this and be long-term long. Okay, great. If you're long-term long, what do you want to do? You want to buy the moving averages. So let's look. Oh, you mean like that? Yeah. You're like, Wayne, that's it? Uh-huh. Yeah. So why has gold fallen for 12 hours? Oh, well, it was supposed to. Wait, what? What's supposed to? Okay, look. This bottom predicts the pink zone. The pink zone is a profit-taking zone. Not a sell zone. It's a profit-taking zone. And then to re-enter, you would re-enter off the moving averages. Oh. That's it. So, what's the best time of day to be trading? Well, let me show you how easy that is. We know when implied volatility increases, don't we? Yes. So we can go to this one. Okay, prime time. In fact, I wanted to change this because of the time zone, right? I forgot. We did this yesterday or the day before, and then I forgot to save the template. I want to move New York. Yeah, maybe even 2 hours. But we'll definitely move it 1. I thought we did it 2, but let's do that. Let's just save it. Yeah, I like it too. Holy, don't want to backfill too much. Okay. What I forgot to do last time is you go to template, save template, and trading sessions. Yeah, okay. Because it doesn't adjust for time change, right? So anyway, so what are you? You're a bull. This is the best time of day. Be trading. Okay, the New York session. If you get the direction right, say this doesn't tell you up or down. But if you're trading this time of day, if you get the direction right, you'll do well. Okay? If you get it wrong, you lose some money or you get knocked out of break even. So if you trade in here, bulls made money yesterday. Okay? Traded in here the day before, bulls made money. So now we're in the right time of day for you to be a bull. Now you just need to wait for a pattern. What pattern? Yeah, exactly. Now you do your job. What pattern? She says. Yes. He says back. That's what you're doing now. If you're a bull, you need to decide, do you buy a higher high or do you buy a higher low? Okay. See, half an hour ago, okay, you would have had this pullback. You woulda, coulda, shoulda did a Fibonacci and maybe looked at a 50%, a 3A2, 50%, 618 for a potential up or a double bottom. You understand that? There's only two situations. You buy a double bottom, okay, or you buy a higher low. And this is what I'm trying to tell you. You don't know if you're right, but you should know how to trade. So if you're a bull, you don't have to be a rocket surgeon. A retracement, is somewhere in here. A double bottom is down here. So there's your plan A and your plan B. There is no other plan. If you're a bull, there is nothing else. You know the time of day. You don't know if it's going up. You think it's going. But having it drop 50%, that was an opportunity. Is it going to work? You'll never know. You have to get over that fact. That's what trading's about. You think you know, but you don't. So what if this collapses from here and you bought a 50%? Well, don't risk too much and don't lose a lot of money, and be fine with being wrong, but you don't want to be wrong all day. For example, let's say if you're a bull now, you were a bull here, right? Okay. Do you see any technical opportunities to buy there? No. So if you bought there, I don't know what your trigger was. I don't see a higher high. I don't see a double bottom. I don't see a moving average crossover. So if you bought in here, I'm not sure why you did it. Oh, well, I'm a bull. Yeah, well, you didn't do it right. And also, if you held on all day, you're not managing your risk properly either. So if I may be so frank, you're not a good trader. And you should do something about that. You should learn how to trade. There's courses for that. You don't have to invent it, right? Cool. So now if you're a bull, you hit a level of support and got a huge rally. And you're like, cool. Because why? You have permission to buy higher lows or double bottoms. If neither of those work, you take a loss. Crappy day, dude. Happens. But if you bought here and put your stop here, you're now done for the day. You're either going to lose money or you're going to make money. All the other stuff in between, it's you hurting yourself. Bad analysis at the wrong time of day is never going to lead to consistent results. Well, there's no better, Sky Killer. They're different trades. Okay? You're compounding day trades and then compounding swing trades. The only thing I would add to that is they should be done in conjunction with each other, and I tend to look quarter by quarter. I break down my year: first quarter, second quarter, third quarter, fourth quarter. And so therefore, I'm going to look at seasonality to know whether I should be adding more 4-hour compounds or 15 minutes. Okay? So for example, on a 4-hour chart, you're doing swing trading, and if you hit the target, it's very likely to come down for days. 2-3 days. Well, that'll take out all your 15-minute compounds. So maybe you take out all your 15s and just some of your 4 hours. Investors only care about your risk, Sky Killer. They don't give two hoots what you do. It's your job. If they wanted to get into the details of your job, then they would just do it themselves. But they're like, dude, Sky Killer, you make a decision. But if you don't make enough money, you're fired. If you take too much risk, you're fired. If you make a lot of money but take too much risk, you're fired. Your job, Sky Killer, is to make money. Print money, basically. You're like, I took almost no risk and I'm making consistent returns. Cool, that's all they need to hear. The only thing is, most people don't do it, even in the professional world. Right? Like, whatever, in the professional world, right? Even that, so it's just whatever, dude. In terms of like any difference in the eyes of an investor, they're going to look at your headline numbers first. What is your sharp? That's a go-to. What's your Sortino? What's your big? Okay. What's your annualized return? What's your internal rate of return? Okay. All these things. And that doesn't take very long, and that filters out 90% of all potential opportunities to allocate. So again, if you're like, hey Wayne, you should invest in my Forex fund, I'll say, okay, well, cool. Let's take a look. What's your internal rate of return? Oh, okay. What's your absolute return? What's your year-to-date return? Okay. Let's say it was all pretty decent. Good. Let's now do risk-adjusted analysis. What's your Sharpe ratio? What's your Sortino
XRP
ratio?
price forecast. Open interest skyrockets as volatility shares to launch XRP futures ETF on NASDAQ.
U.S. stock futures flat. Urban Outfitters upbeat on the consumer.
Okay, so let's say you pass all of that. And we're like, oh, dude, look at this guy. He's got a great Sharpe. Sortino's great. Beta's fine. I might look at some correlation stuff too and say, oh, well, this guy might actually fit well in my portfolio. So then, Sky Killer, I might look at your actual trade history. But 95% of people don't get that far. Like, you remember the copy trading when that was the thing? I looked at something like 3,000 profitable traders. Let me say that again. I looked at 3,000 profitable traders. I didn't look at any non-profitable, right? So I looked at 3,000 profitable traders. And you know how many I found that were investable? None. They took way more risk than they were even compensated for. So they were profitable, but I can make easier money doing all kinds of things better than that. So, okay. So then I look at your trade history, and maybe you're doing stuff in the trade history that is kind of cheating. And what I found in that situation when I analyze investment opportunities is that they're cheating the numbers where most of the trades are, let's say, low risk, low reward, but 1% of the trades are high risk, and they made a lot of money. They just happen to do really well, and they get averaged out. And it doesn't come out in the math very well. But then I look at it, and let's say I analyze your trading, and I see one lot, 12 lots, one lot. I'm like, oh. So I take those out as outliers, and all of a sudden there's no return. So 99% of the time you don't do jack, but 1% of the time you hit a home run. Well, if you ever swing and a miss, then I lose money. Or I wasted my opportunity with you. Maybe I give you $1 million, but I could give $1 million to somebody else who actually would have had a return. So that's why we need to look at these things, right? Then the second thing is, if you pass that and there's no red flags there, I'm going to look at your trade history and I'm going to pull out particular days that were bad, like particular times that were bad. So like, how about that February, March, April period? How did you do? Okay, I made 10%. Great. Well, the market was down 20%. Okay, great. So I'll say, okay, how does this person behave under duress? And it's okay if they lost money during that period, because many asset managers did lose money because that's what happened. But did they panic? Did they freak out? Did they double down? Did they change their lot size? Did they trade 5 times more volume? Did they just keep buying on the way down, digging a deeper and deeper hole, and then have it bounce back and they got lucky? So that's what you would do. You would do, situation awareness type analysis and look for panic, because in the future, like, they might be, again, 99% of the time they're a good trader, but that 1% of the time they could blow up your trading account. Well, professional allocators are much more worried about the 1% downturn than the 99% easy peasy. Trading should be easy peasy. Okay, so was that a helpful answer, Sky Killer? Cool. So anyways, bears, you do you. Bears are looking for lower highs. Not many of you are bears. Bulls are looking for higher lows. This is the right time of day. You know your prices. And the rest is, I don't know, straightforward if you have the data. So if you don't have the data, why don't you sign up for traders.com? Sentiment, fundamentals, technicals, and performance coaching. Today at 4, I have a swing trading meeting that everyone is welcome to attend. Tomorrow, Brian's leading crypto. Meta's leading group therapy. Right? Yeah. So we have busy days. Okay, we have busy days, lots going on. It's all here, man. It's all here. Oh, and just if you trade through us as well,
U.S. dollar index turns
you get a
volatile near
cash
99.50
back
after
rebate
Trump's bill advances to
on
Senate.
your spread.
Euro-ARD pound pulls back as Eurozone business activity contracts. UK services gain momentum.
Huh? You see that? So super easy. I like this one. Right? The crimson blazer. I actually own a blazer just like that. But anyways, cash rebate. Real cash. Not a credit. Real cash. You can withdraw it if you want. But who knows? Maybe at the end of the year, it saves you hundreds, maybe thousands of dollars. I don't know how much you trade, but, cash rebate. And there's no fee for that or anything. You just have to be a subscriber to the TRADARS platform. So thank you to you. Thank you to Traders Way for their FT4. Peace on earth. May the pips be with you. May our profits be above average. And for those that are subscribers to traders.com, I'll see you at 4 p.m. for a swing trading group meeting.